In a healthy economy, debt gets smaller over time. In Canada, it doesn't. That's not a metaphor. It's not a feeling. It's how the system is now built. Imagine paying your mortgage every single month, never missing a payment, never falling behind, and yet, year after year, you own less of what you're paying for. Same payment, higher balance, longer timeline. That shouldn't be possible, but it is. And here's why this matters. This video is not about housing prices. It's not about whether homes are expensive or affordable. It's about something much quieter and much more dangerous. What happens to an economy when debt is no longer designed to disappear, when paying no longer creates progress, and when the future quietly stops becoming better than the present? By the end of this video, you won't just understand how this happened. You'll understand why the system doesn't want to fix it. To see what changed, we need to rewind. Traditionally, debt followed a simple path. You borrowed money, you paid it down over time, and with every payment, your ownership increased. Each month, a little more of what you paid actually belonged to you. That system worked because three things were true. First, income tended to rise over time, not dramatically, just enough that the future felt manageable. Second, interest rates were relatively stable. They moved, but not violently. And third, debt had a visible end, a finish line you could point to and say, after that, I'm free. Under those conditions, debt wasn't a trap. It was a bridge. You borrowed against a future that was allowed to improve, and that assumption, that the future would be better than the present, that is what made the entire model function. But something changed, quietly, not overnight, not with an announcement. One assumption in that equation was bent. And once it bent, the math still worked. But the meaning of debt completely changed. Canada didn't eliminate the old debt model. It modified one rule and kept everything else looking the same. In a normal economy, when pressure builds, something eventually has to give. Debt shrinks. Not because anyone wants pain, but because systems need to clear. Some borrowers fail, some loans get written down, some assets lose value. It's uncomfortable, but it resets the system. This time, that didn't happen. When interest rates began rising, the old logic should have returned. Higher rates mean higher pressure. Higher pressure reveals weak debt. Weak debt forces adjustment. But instead of allowing that process, the system chose a different path. Not defaults, not write-downs, not price resets. Time, loans weren't removed, they were stretched. Monthly payments were held in place, timelines were extended, and the interest that couldn't be paid was quietly added back onto the balance. If this way of breaking things down is useful, subscribing helps this channel keep doing it. From the outside, everything still looks stable. No wave of foreclosures and no visible collapse. But underneath, something fundamental had changed. People were still paying every month. Yet their debt wasn't shrinking. In many cases, it was growing. Imagine this. You're in a small boat with a leak. You're bailing water out as fast as you can. You're tired, but you're doing your part. The problem is, someone else is pouring water back in. You don't sink immediately, but you never get dry. That's what this kind of debt does. Effort no longer creates progress. It only delays consequences. You do everything right. You stay disciplined. You keep paying, but ownership doesn't increase. Relief never arrives. And this is the moment where debt stops behaving like a temporary tool. It becomes a condition, something that exists to be maintained, not resolved. From here, the economy begins to behave differently. Not dramatically, not violently, just strangely. People pay more, yet feel poorer. The system keeps moving, but nothing clears. No reset, no healing, just motion. This isn't collapse, it's movement without momentum. And the most unsettling part is this. This arrangement works well enough to continue. No one is forced to admit failure. No one has to absorb the loss today. Everything is suspended in place. And once debt stops shrinking, the economy quietly starts to change shape. But the most dangerous part isn't the debt itself. At this point, something subtle but important has already changed. People are still paying every month. Banks are still collecting. The system still looks functional from the outside, but underneath it, the relationship between effort and progress has quietly broken. In a normal debt system, every payment does something meaningful. It reduces what you owe. It increases what you own. It creates a sense of momentum. Here, that connection is gone. You can pay more this year than last year and still owe more than you did before. That's not just frustrating. That rewires behavior. When ownership stops increasing, effort stops feeling productive. You work more, but the finish line moves faster than you do. Saving feels pointless. Planning feels risky. Every decision becomes defensive. Not how do I build, but how do I not fall behind? And this is where the problem stops being personal and starts reshaping the entire economy. Because economies don't run on numbers alone. They run on expectations. When people believe tomorrow will be better than today, they invest. They take risks, they start businesses, they move for opportunity. But when debt stops shrinking, the future stops feeling like an upgrade. So behavior shifts. Households don't spend on new things, they spend on maintenance, repairs instead of upgrades, subscriptions instead of investments, short-term comfort instead of long-term bets. From the outside, money is still moving. GDP still prints. Jobs still exist. But it's a different kind of motion. Nothing clears. Nothing resets. Nothing heals. Old debt stays alive. Old assets stay protected. New ideas struggle to breathe. This is what a zombie economy looks like. Not collapsing, not recovering, just walking forward without getting anywhere. And the most dangerous part is how quiet it is. There's no single moment where alarms go off. No dramatic failure. Just a growing sense that life feels heavier. Even when you're doing everything right, people start optimizing for survival instead of growth. Careers become about stability, not advancement. Businesses focus on protecting margins, not expanding capacity. The system isn't broken enough to fix, but it's too distorted to move forward. And here's the line most people miss. This doesn't happen because debt exists. It happens because debt is no longer designed to disappear. And once that design choice is made, the economy doesn't just slow down, it changes shape. But the scariest part isn't the debt itself. It's what happens next. When an entire system becomes dependent on making sure that debt never has to face reality. At this point, a reasonable question starts forming. If debt is behaving this strangely, if people are paying more but owning less, why doesn't the system just correct? Why not let prices adjust? Why not let debt reset? Why not let things clear so the economy can move forward again? The answer isn't conspiracy, it's alignment. Because once debt stops shrinking, too many parts of the system quietly depend on that fact. Households need it. If debt were forced to reset, millions of people would instantly face losses they can't absorb. Not because they were reckless, but because the rules changed around them. Banks need it. When loans stretch instead of break, losses stay theoretical. Balance sheets look stable. Risk stays hidden. Time becomes the asset. Governments need it. A correction isn't just economic pain, it's political failure. Falling asset values don't show up as charts. They show up as panic, anger, and elections lost. So the incentives line up in a very specific way. No one wants to be the one who forces the reset. Everyone prefers delay, not because delay is healthy, but because delay spreads the cost quietly across time. And that's how a system stops asking, is this sustainable? And starts asking, how long can this be carried? From the outside, this looks like stability. No crash, no chaos, no headlines screaming emergency. But internally, something subtle happens. Losses don't disappear. They become invisible. They sit inside extended timelines, inside frozen payments, inside balances that never quite go down. The system doesn't heal, it anesthetizes. And the longer this goes on, the harder it becomes to unwind. Because the moment you stop extending, everything has to be recognized at once. That's why the system keeps choosing the same response. Stretch, delay, absorb later. Not because it works, but because every alternative hurts faster. And this is the quiet shift most people miss. The economy stops being about growth. It becomes about preservation. Preserving balance sheets, preserving confidence, preserving the story that nothing fundamental is wrong, even when something clearly is. And this is where the cost stops being financial. When debt never really shrinks, the damage doesn't arrive as a headline. It arrives quietly inside ordinary decisions. It doesn't show up as panic, it shows up as hesitation. People don't stop working. They stop committing. Every decision starts carrying extra weight, not because people became careless, but because the margin for error quietly disappeared. A job offer in another city becomes a risk instead of an opportunity. Starting a business feels irresponsible, not ambitious. Even taking time off feels dangerous. Life doesn't collapse, it compresses. Plans get shorter, goals get smaller, choices get safer. People begin optimizing for survival instead of growth. They don't ask, what could this become? They ask, what's the least damage I can do? This is how an economy loses momentum without losing activity. Everyone is busy, no one is moving forward. And the cruel irony is that none of this feels irrational. In a system where obligations never shrink, caution becomes the only reasonable response. But when an entire society learns to hesitate, progress doesn't fail loudly. It simply stops being attempted. When more income goes towards servicing old obligations, less is left for everything else. Spending narrows, not dramatically, selectively. People stop upgrading, then they stop experimenting, then they stop risking. Restaurants feel it first, then small businesses. Then hiring slows. Nothing breaks, everything tightens. But the deeper cost isn't economic, it's behavioral. When the future is already mortgaged, people stop planning forward. You don't take chances. You don't move cities. You don't start companies. You wait. Life becomes conditional. I'll do that after things stabilize. I'll move when costs come down. I'll start a family when it feels safer. And slowly, later replaces someday. This is how an economy loses momentum without ever collapsing. Not through panic, through caution. And the longer this condition persists, the more it reshapes who stays and who leaves. Those with flexibility quietly exit, not out of anger, out of arithmetic. Those without flexibility adapt. They compress their lives into smaller spaces, shorter plans, lower expectations. The system keeps functioning, but at the cost of ambition. And that's the trade few people notice until it's too late. An economy can survive debt that never ends, but it cannot thrive on it. Because progress requires slack, and slack disappears when everything is already pledged to the past. When debt becomes permanent, time stops working in your favor. And when time stops helping, effort starts feeling pointless. This isn't collapse. It's something colder, a system that keeps moving, training its people not to expect more. So this was never just about housing, or interest rates, or affordability. It was about what happens when an economy designs debt to last longer than the lives paying it. When paying becomes permanent, planning disappears. The system doesn't fall, it freezes. In the next video, we're going to look at how this same illusion didn't stay trapped inside debt, but spilled outward and reshaped what growth even means. If this helped you see the system more clearly, not louder, not angrier, just clearer, subscribe, because understanding how a system works is the first step to deciding how much of your life you're willing to give it. Thanks for watching.